YouTube connected. Listwithelizabeth.com. Status connected. Facebook Live connected. Rumble connected. Twitter X connected. LinkedIn connected. This is the booth. We are cleared to go live. Send the signal to the studio and go live.
List with Elizabeth show, ready to go live in 3, 2.
When you think selling and buying a home,
When I think real estate, I think List with Elizabeth.
Elizabeth Klein.
Elizabeth and Klein. And here is the host of the List with Elizabeth show, Elizabeth Klein.
Hello, everybody. Hello to my screaming fans out there. Thank you for that wonderful, wonderful introduction. I am Elizabeth Ann Klein, host of the List with Elizabeth show, helping sellers sell and buyers buy residential real estate in the Northern Virginia area. Thank you to everyone who has subscribed to our show. I would definitely encourage you to subscribe if you have not already. Please keep the comments coming. Let me know what other topics you'd like me to cover, things you're interested in learning about, whether it's on the buy side or the sell side. We do this every single day, helping people in the market. And I understand that everyone else out there may not do this every day. So if there's a topic that you'd like covered, please let me know in the comments. You can also always call us at 703-829-LIST. And we look forward to connecting with you. If you are not in the Northern Virginia area, feel free to also reach out if you need a professional to help you elsewhere. I'm happy to use my internal network and get you connected to a realtor in your area, whether, again, you're looking to buy or sell residential real estate. So let's get into our show today. I am super excited to bring in our guest today, Paul Denman. He is going to be our specialist in talking to buyers about something that we call bridge loans. So as you know, when you're going to buy a house, a huge, huge chunk of this process is the financing component. And most people may be familiar with a traditional loan, but there's so many options out there that lenders can offer depending on your credit, your situation, the house, all different variables. I'm going to obviously let Paul fill us in a little bit more about that. But I think truly my lesson today to all the buyers out there is where there's a will, there is a way. There is always a way, whether you have good credit or not, whether you have a large down payment or not. There is a way to enter the real estate market. But today we're going to bring on Paul Denman with First Heritage Mortgage and talk a little bit about an option called bridge loans. So there he is. Hi, Paul. Thanks for being here today.
Thanks, Elizabeth. Thanks for having me.
Absolutely. Paul is a local lender with First Heritage Mortgage. And Paul, if you want to tell us a little bit about yourself, how you got into lending.
Yeah. So I've been lending since the 80s. And or been in mortgages since the 80s. I grew up in the area. I grew up in Vienna. And when I was graduating high school, I asked somebody in the church halls if they knew about any summer jobs because he worked at the CIA. So that interested me as a young 18-year-old. And he said, no, but my wife in McLean, she works for a mortgage company and they're hiring. And I said, okay. So that's how it all started.
Let's go. There you go.
So, yeah. So, but yeah, so eventually I worked through the whole process and became a loan officer. And now I'm vice president of construction, bridge loans, and renovation loans here at First Heritage Mortgage in Oakton.
Beautiful, beautiful. So as I had said in the intro, obviously financing is a big piece to any real estate deal. So when you're going to buy a home, you need a really good lender on the back end, advising you, giving you options, that type of thing. So today we're going to focus on what's called a bridge loan. So Paul, if you can just very simply explain what is a bridge loan, who might need that, how often are bridge loans done, that type of thing, just to get started.
Sure. So start with the last question first. Like, how often are bridge loans done? They're not as predominant in the marketplace as they could be, and that's only because not all lenders will allow bridge loans. They just don't do them. They don't have the wherewithal or the product. So that narrows the scope of how many are done every year. But they're done pretty frequently at our company for a couple different reasons. And a bridge loan is simply a short-term loan used to just do that, bridge you over to the next property. And sometimes it avoids pulling money out of assets. Sometimes it avoids having to qualify for both loans. And sometimes it's just convenience. So there's many reasons to use a bridge loan. Talking to the right loan officer and trying to figure out if a bridge loan is right for you is the best thing to do. It's like anything with lending. We'll supply you your different options, and then you can decide which is better for you. If you want to write a non-contingent contract, but you wouldn't otherwise qualify for a bridge loan, then that might be the best way to go in this marketplace. And what it does is help you in our market when you're easily you can sell your house, but it's a little harder to buy the next one. It bridges you, so making sure you have a smooth transition from one home to the other.
And I do like what you said right in the beginning, is that some lenders won't offer it because they don't have that in their toolbox, right? So as a buyer, I do want the buyer's message to be that, every lender is not going to have the same portfolio of marketable tools and loans that they can offer you. So if you talk to one person and aren't really finding what you want, you can talk to someone else. This is, and to Paul's point, I mean, he may be one of 5 people that is going to bring this up as an option for a buyer. So it's really important that, again, you surround yourself with professional people, you get good information, you're talking to the right people so that you can have all the options available to you.
Absolutely. So I've always viewed my job as an originator to help people to lay out the options. A long time ago, a customer said, "Paul, you're not going to help me make the payment," when we were laying out options. And I said, "Absolutely, I'm not going to help you make the payment.
Right.
You've got to decide. So which is the best option for you?" Bridge loan being one of them. And I've also found it interesting how sometimes lenders that don't offer it kind of downplay the program. Instead of saying, "Hey, I know I have a friend," as I would if I didn't do them. I know somebody that does them.
Right.
Let me talk to that person and find out for you what your concerns are, and try to and make sure you're vetting everything. So if somebody says, "Oh no, you don't want to do it that way," you should probably talk to a lender that actually has the product and make sure that's the best choice for you.
Yes. And what's nice too is talking is normally free. Unlike consulting with an attorney, which you might pay, this is free. So guys, take advantage, make the calls, take a little time, invest in yourself, invest in your purchase, make sure you're doing the right type of loan, call someone like Paul to get these options. Okay, perfect. So give us some more information here on who might be looking at who's your perfect candidate for a bridge loan.
Sure. Well, I mean, I wouldn't say there's a perfect candidate. There's good scenarios, and maybe it doesn't always work for somebody if they're not comfortable making the bridge loan payment at the same time, maybe their current house or a new house payment, or vice versa. So, but I'll give you a couple scenarios as to what can be done. So somebody, let's say they don't have the cash, or they don't want to pull the cash out of investments or retirement because of penalties. But they have enough money to in their equity of their current home to use a bridge loan and pull the money out of their current home. And the way we do it, it's a whole new first trust loan. So we pay off whatever loan they have currently, and then we pull the extra cash out. and then they put that down on their next house, and then let's say they qualify for a standard conventional home loan on their next house, then they can get a regular loan from us and a bridge loan. And then once the house sells, they just pay off the bridge loan. And the nice thing about bridge loans is there are no prepayment penalties. So, and we actually want you to pay it off early. Again, it's a short-term loan, and we want you to pay it off within 6 months. To make sure that, it achieves what you wanted to achieve. That is transition out of your old home into the next one.
So bridge loan is more for, in that scenario, maybe using it as a down payment and closing costs.
Yep. Because you didn't want to pull it from elsewhere. Mm-hmm.
Okay. Yeah. And what are the, okay. So someone's going to do a bridge loan so that now they have their down payment and closing costs. Mm-hmm. Does it show as a contingency on selling the home that they're currently in?
Nope.
Okay.
It would be non-contingent at that point, because if I'm able to qualify somebody carrying the bridge loan and the new loan, then it's not a contingent contract. We just have to do the refinance. We'll do the refinance and pull the cash out with the bridge loan about a week before you close on your purchase transaction to make sure the funds are there in time for the purchase. And then that's it. So the seller, we could disclose to the seller, hey, we're getting a bridge loan. Mm-hmm. But by then we've already vetted that. We've already figured that out. So it's usually just a quick conversation with the agent.
So from the realtor side of things, let's say on the listing agent side, mm-hmm. the pre-approval letter is going to look like a standard conventional pre-approval letter. And on the back end, the buyer's actually getting two loans. They're getting the bridge loan and then the conventional loan. Is that correct?
That's correct. And I may, as a loan officer, say, hey, maybe we should put a comment here on the letter saying, hey, I'm going to get a bridge loan. But sometimes people are like, look, my rich Uncle Elmo is going to provide a gift if I can't get the bridge loan in time for some reason. In that case, we wouldn't have to mention it.
Right. A good old Uncle Elmo.
Yep.
Gotta love him. So I guess that brings us up another point. How often do the bridge loans not go through? I'm guessing it's rare, right? That
relatively rare, yeah. Because we the way we handle it here at First Heritage, we vet the loan. It actually goes to my executive management team at the pre-qualification stage. So as long as the appraisal comes in, it's just like any loan. You still have the same job and income you have. Everything else is the same. Then you're going to get the loan. So we do an extra step right up front to protect the purchaser, to make sure that we're very comfortable with the loan, because we are lending out of our loan, that there's no other party involved. It's our local money that's coming into the marketplace, and we want to be comfortable with it. That doesn't mean we're extra harsh. It means we can think creatively. And we do within reason. And then we also want to make sure we're lending responsibly. So we will, make sure the cash flow makes sense and the customer can make, both payments if there are two payments involved.
Okay. Cause it sounded like you do the bridge loan very close to closing day on the new house so that there aren't as many payments.
Correct. Right. Cause once we close on the bridge loan, then you start having to be charged interest. Yes. So we wait and try to minimize that. That doesn't mean we don't get everything else done in plenty of time. It's not a last minute type transaction, but the closing doesn't take place until we get close to the purchase. And we can get them done within 30 days or less sometimes if you need to, if the transaction calls for that.
Okay. And so I'm guessing that, as a buyer, someone's going to sit down with you and say, okay, show me what are my anticipated interest payments if I hold it for 3 months, 4 months, whatever it is, versus what do I have to pay as a penalty to pull it out early of my 401k, or, are you sort of sitting and advising people like, here's this, here's this, here's this.
Right.
Okay.
Well, and so we'll go back and we'll say, hey, if they have like a wealth manager or financial advisor, go back to them and ask them, like, can I pull the money out of a different vehicle? The other thing is, if we catch them early enough, maybe they get a home equity line of credit on their house. But here's the thing, home equity line of credit might have a prepayment penalty, so you got to weigh that cost as well.
Okay.
And also, if the home is already listed, if you've already listed the property for your customer, most home equity lenders will not let you get a home equity line on a home that's been listed. And many, you can even take it off of the listing system, and they'll still say, no, it's been listed recently, we're not doing it. And that's where a bridge loan will help in those situations.
So it sounds like it's similar to an equity line. What are the big differences?
Yeah, the big difference is we're going to pay off whatever other loan you have on your property or loans you have on your property now. And you draw the money out all at once at closing, whereas an equity line, you could wait and draw it out slowly or a little bit at a time. So that's really the differences between the two as far as mechanically how they work. It's a true cash out on right after, about a few days after closing, a wire goes out, and you get all the cash that was available to you. The other thing is, on a bridge loan, we'll lend up to 75% of the value of the home, where a home equity line, some of the lenders that we refer out to will do 100%. This is a great thing to talk to people about when they're thinking about listing a home and buying another one, is what's the best option for you, given what you want to do and what you'd want to achieve. So for instance, in the DC Metro, if you're moving up, maybe a bridge loan is a good option for you because you can have a smooth transition out of the home, and maybe you get another loan on the new property as well. But then there are those people that, let's say they're going to retire out of the area and they have lots of equity in their home.
Okay.
Maybe we use the bridge loan to pull the money out now, and they pay cash for their next home out of state, let's say, or downstate, wherever it is.
Okay.
So that would be another scenario that allows for a non-contingent purchase transaction where they don't intend to have a mortgage at the end of the day.
Right. And that is important, especially, with inventory being so low, not only here in the Northern Virginia area, but really all across the country. Inventory is low. So if you are trying to put forth a strong offer as a buyer, you really need to veer away from a contingency on selling your existing home. That is a huge risk for a seller to take on. So, just like what Paul's saying, there's different ways that you can get creative and get around that. Because as a listing agent, if an offer comes in that says, hey, we really want to buy this house, but our buyers need to sell their house, it just went on the market, we don't have any offers yet, that's a huge unknown, right? We have to get the other house sold, get through inspections, get through financing, get through closing, and then we can come over here and finish this one. So there's just a lot of variables in there that could go wrong. So set yourself up for success. Don't set yourself up for failure when you're starting this process, because you'll be a lot happier down the road. The stress level will be way down, and it will pay off. It will definitely pay off.
Absolutely. And we've also used this, just to mention, for a few of our customers that we're going into an independent living, which requires sometimes a big chunk of money to just buy into independent living, into one of these independent living communities. So we've used the bridge loan to do that, because guess what? To your point about the smooth transaction, not having to stress out. And I always tease people, well, you have to act like you don't live in your house when you're showing your house, right? It has to be tidy.
It's not really a joke. It's true.
you avoid all that in those scenarios when you're ready to go. If somebody's ready to go into an assisted living, whether it's you or whether it's a family member, what's nice about it is we use the bridge loan, we get the cash out. They don't have to pay penalties on taxes necessarily, maybe, if they have other investments, and then they just get to move over their stuff that they want to move in, because chances are it's going to be a downsize.
Right.
And then the listing agent, the family members, whoever, clears out the house, gets it ready for market, and sells it. And it's a beautiful thing, because I think it does lower the stress level in that particular situation, which I think could be quite high.
Sure. And, sometimes people they're not at their full health, or they've got other things going on. And this just creates a window of opportunity for them to have low stress and get everything done and achieve their goals. So it just depends, right? It's dependent on on each and every person. I know you had a
Absolutely.
couple scenarios you wanted to walk through.
Sure. So I think we went through kind of scenario one, but what's another scenario is we've been talking primarily about using this as on your current home. You have tons of equity, you're refinancing, you're pulling that cash out, you're going to put it down on the next house. However, sometimes the situation is I have my 20% to put down on the house, but I don't qualify carrying my old house and the new house.
Right.
And talk about non-contingent, right? You don't want to be contingent on selling your current home. Well, we can use this to buy. We can use the bridge loan product to purchase a home. You put 20% down. It works just like a regular mortgage would as far as the down payment and stuff. You put 20% down, and then the idea, though, again, it's a short-term loan. Once you sell your departure residence, let's say you do have tons of equity in there, but you didn't need to cash out of it to put the down payment down, then you can pull the cash out and buy your next home non-contingent. And then once your departure residence sells, then you pay down or pay off the bridge loan and you're done. And we can refinance you into a 30-year fixed or whatever product you qualify for that we have, if you don't want to pay off the whole thing. And then you'd have 6 months to do that once we close on the purchase. But that's another beautiful way of doing this where you don't have to write a contingent offer, and again allows for another smooth, stress-free transition into the home.
I love it. That's incredible. Can bridge loans be used to buy investment properties?
Limited, that's case by case. But again, it's our local money, so we would look at that. We could do it that way. It's not necessarily a vehicle for like an LLC, something like that. It is a consumer type loan. So you'd have to have be a personal signature of the loan. But we've done it in some pretty narrow circumstances. But I always tell my customers, the loan officers I support, like, bring me the scenario and we'll look at it and talk through it and see if it makes sense. Again, the nice thing about the way we have our system set up is we are going to let you know right up front whether that investment property structure looks right, and we'll do it. So you're not going to be surprised later by something, and there's no investor behind it. We are the investor effectively. So we're not going to flip through guidelines and say, oh, well, we can't do it because of subsection G of the guidelines. That's not going to happen. If we made an exception up front to do something like that, then that sticks.
You had mentioned earlier there's an appraisal. The appraisal has to come in. Is that on the departure house, or?
It depends on which home we're lending on. So sometimes if we do both homes, and that's a third kind of scenario.
Okay.
It's generally, if it's a cash out refinance on your departure home, we're going to do the appraisal on that. If it's a purchase, we're going to do it on the purchase transaction. If it's both, we'll do it on both. And both would mean I don't want to pull money out, or I don't have the cash, but I have the equity in my departure residence, and I don't qualify carrying a new purchase loan. So can you do a cash out, pull the cash out of my current home and put it down on the new home and give me a bridge loan for the new home? I'll sell the old home, and then once I do that, I'm going to pay you down or pay you off and possibly refinance into a permanent loan down the road. So within 6 months. So that's a scenario where we do appraisals on both.
Okay.
So we do appraisals on these products generally. We tend not to waive them. There's been a few narrow circumstances where we do that. Or let's say you went to another lender and for some reason they didn't do it, but the appraiser we're familiar with, then we might allow to use that other lender's appraisal to do the purchase or do the bridge transaction rather. That's a fairly narrow circumstance, but again, we can think creatively within reason and get these things done. So bring a scenario and we'll try to figure it out for you and lay out your options.
And sometimes people ask me, they'll say, oh, I had my house appraised last year just because we wanted to do that or just because we wanted to know what it was worth. Can you use that appraisal?
Generally, no. And actually, on that appraisal, it'll often say this is not for lending.
Right.
So that generally, and a year later, no, we wouldn't do something that old. I'm talking about if we use somebody else's appraisal, it'd be fairly recent, the last couple months.
Yeah. I think
because the
sometimes
market changes.
people don't realize you can't just get an appraisal and use it. It has to be
Right.
ordered by the lender that's doing the transaction at the time. So save your money. Don't,
Yeah.
go run out and get an appraisal because you think you need it in the process. Most likely it cannot be used.
Absolutely. And I found,
Bridge loan or not,
honestly,
cannot be used. Yeah.
Elizabeth, you guys use the same data appraisers use. A good
Yeah.
realtor like you can put together a pretty good, solid case for what the value of the home is and what they're selling for, and actually more real time. I always say, the appraiser looks in the rear view mirror. The homeowner and the realtor are sometimes looking out the front windshield.
I like that.
But you can put real data on there that is real time. You know what the market is, you know what's listed. You can do some good things. It's not an appraisal, but you can get a pretty good feel for what a house should sell for.
I think too, sometimes homeowners feel that an appraiser's value of a home is like the stamp of approval market price. It is not. If
Right.
you had 3 appraisals done in the same day, you would get 3 different values. There
Yes.
is no mathematical perfect
Right.
formula that a house is run through. It's a little bit of science, a little bit of art. It's
Absolutely.
a little bit of personal opinion as well. So you really have to just step away from that idea.
Yeah.
I did just want to bring that up because sometimes people approach me and say, "Hey, I just had the house appraised last month. Like, here's what it's worth." And I'm like, "Oh, well, we'll see." And we
Yeah.
can't use this, and you don't have to give it to anyone because no one's going to want to see it. So
Right. Yeah. That part art sometimes, will surprise people, and they're looking, let's say there's 10 homes that have sold in your neighborhood, right? Over the last 3 months. Well, which of those 10 do you take? That's where the art comes in, right? Like if they're all like in kind, like which are the best matches to your home?
yeah.
You can take the lowest ones, you can take the highest ones, you can take a mix or the middle. Like, so that's why, to your point, they can come back quite differently.
Yeah, and sometimes I've seen some appraisers will say, "I'm not gonna go out more than a half of a mile." And then other times I see reports come in and they're going 3.5 miles out.
Right.
And you just never quite know where where the data is gonna land.
Right.
So if you're looking to do a bridge loan or really just a transaction in general, don't feel like you have to go out and get your own appraisal.
Yep. We could probably do a whole show on appraisals.
That would be great. We'll do one another day. So the bridge loan flow, I think we have a slide on that. If you want to chat us through a little bit.
Yeah. So this is a cash out refinance flow, basically, which is we get the appraisal out, and we haven't really talked about qualification, but documentation, we do collect the standard documentation you would on any loan, your pay stubs, your bank statements, that sort of thing.
You mean I need a pay stub?
I know you do have to have a job usually,
Okay.
but hey, here's the other thing
Always
we will do. Talk about thinking creatively.
Yeah.
Like, because we might be dealing with somebody, let's say, that's already retired, right? So they have X amount of dollars they're pulling out of their, let's say, Social Security and a pension. That alone may not qualify them, but they have a chunk of change in savings. Maybe they're not tapping into it yet. We'll use something called asset dissipation to calculate additional income for them using their savings that they've saved up over the years.
What was that word? Asset dissipation? Wow.
Big lending term.
I'm going to start using that in my everyday language.
Yeah. So it's great though, because the agencies do allow it, and we tend to follow Fannie Mae or Freddie Mac, how they view things. And we can take the one that fits our scenario best. But that's one way we can help qualify somebody. The other secret sauce we use is if you're departing your residence, and our worst case for your customer would be, what if they don't sell the house? Now, if they listed with you, then of course they're going to sell it. But if they didn't,
Yeah.
what's our worst case? Our worst case is we go back to them and say, hey, I think it's been almost 6 months. Let's go ahead and start a refinance for you as an investment loan. Go ahead and get a 12-month lease and lease out the home and then list it in the spring again or what have you, a year from now or 6 months from now, whatever you all decide. But that would be our worst case. So with your help, Elizabeth, we would get rental comps for that particular home and say, okay, if we rented it out for that, there's a formula we use to figure that out. And we offset the mortgage payment by that much to help them qualify. So that's our kind of our secret way of qualifying folks that otherwise wouldn't, because most loan programs won't let you qualify that way. But when you do a bridge loan, it will. Okay. So it's kind of nice.
Yeah, that's very nice.
Yeah. So we will, back to the chart, we'll do a appraisal. And once we appraise and refinance their current home, we have to wait 4 days once you sign the paperwork, basically, and then the funds are released. Okay. And then you go ahead and purchase your new home with, let's say, a regular home loan or cash. And then once your departure residence sells, your old home sells, then you just pay off the bridge loan and you contact our office and we send out a payoff, and that is all taken care of. So
it has to be done within 6 months.
We want it done within 6 months. We'll do some exceptions beyond that, but those are those things we catch up front. For instance, we recently helped somebody who wanted to build a home. They had their current home, but they really needed to sell it in order to get their cash for the construction loan. Okay. Well, what we did was we allowed them to do a 12-month bridge loan. And so they have 12 months to pay us off in that case. And then because it's coupled with a construction loan. And so the builder, they put the money down. We pulled the cash out of their current house. They put the money down for the construction loan. The builder's building it now. And once the home is built, they'll put their house on the market and sell it. And then we'll refinance them into permanent financing once the home is done for the construction loan. So that's another scenario that is a little interesting, but that can work too, because obviously they got to have some place to live while the home is being built.
Right. Wow. So you definitely can get into some complex financial situations.
Absolutely.
Yeah.
Yeah. Again, bring the customer, bring us the scenario, call us and let us know what your situation is, and we'll try to help you.
Perfect. I love
we've probably seen it all, done it all. If it, including, if somebody's going through a transition like divorce, juggling kids and households and all that, and splitting up the household. This actually works really well for that situation too.
Oh, great.
So, because we've had them before where the folks wanted the kids to be in a certain school district, but not in their current school district. So we moved one party over to the new home using a bridge loan to purchase. And then they sold the marital home, and then the other part, and the kids stayed there. So the kids had a nice smooth transition for the kids. And then the other spouse had the other home set up. And then it was a lot easier that way, a lot less turbulent during that trouble, that, the time that it normally would be. Yeah. So this is a problem solver, definitely, when it comes to situations like that. So again, bring on the scenario. We'll try to help you. Good.
Bring it on, right?
That's right.
We had a little segment here. We may have covered this, but alternative uses for bridge loans. Is there anything else you wanted to comment on for that?
Yeah, I think we talked about the assisted living situation. I will say, and the divorce situation, those are the two primary ones. The other thing is, and we already talked about cash out HELOC, but I will tell you one thing, especially in our area with all the veterans that we have in our area, what we've done before is we had a veteran buying a home that really required 10% down, even using a VA was the best scenario, got him the best rate and everything to buy that home. Well, what we did was we took the 10%, used the bridge loan to take the 10% out of their current home, freed up their VA eligibility from their current home completely because we paid off the VA loan.
Right.
Put
Okay.
the 10% down on the new home. Family moved into the new home. They sold the old home, paid off our bridge. They had a VA loan
That's
on
great.
their new home. And here's the secret sauce. We will allow to use your rental comps, Elizabeth, to offset
Oh,
the old mortgage payment, the bridge loan payment on a
okay.
VA. So they didn't.
Oh.
So we didn't have to get another bridge loan for them. We got them a regular VA 30-year fixed, and we used the realtor's rental comps to offset the mortgage payment. They allow that. It's in the guidelines for us. So
Right.
it was
Wow.
a really specific transaction, but it
Mhm.
worked beautifully because, again, smooth transaction for the family. They didn't have to sell their house and move into temporary quarters and then to the new house. It was a nice thing, and it freed up the VA. 100% of the VA moved over to the new house.
Yeah.
And they got to put 10% down, so they got the best terms. Just all the way around, it was a good, and it was relatively easy transaction to do because of the way the bridge loan works to allow to pull the cash out. So
And that really, just you saying they didn't have to move into temporary housing before they moved back. That is really tough on people and on families.
yeah,
And
well, especially our veterans because
yeah,
if they served, they might have already had to do it a few
yeah,
times. So staying on a base house or something like that. So
yes.
I was happy that we didn't have to, put somebody through that or say, well, that's probably the best thing to do. And it really wasn't in their case. So it was
Right.
a great way to use a bridge loan, and the outcome was awesome.
That's fantastic. Do you ever have people come to you and say, "Look, I'm told that, I can't really make this work." And then after talking to you, you find a way to make it work?
Yeah.
Yeah, I could see that.
It pretty much every day. It's not one of my
Every
loan
day.
officers. It's one of my customers.
Yeah.
Will be like, I don't know if this is going to work, but rarely have I had to say no to somebody, and usually it's something really out there. Somebody wanted to buy a home out of the country, and I'm like, I can't use a bridge loan. It's got to be in the United States. Sorry.
Right.
But and we land up and down the East Coast primarily, but in a lot of states out west too.
Oh, okay.
But primarily our focus is East Coast. So,
Okay.
yeah, this was completely out of the country. So I'm like, because otherwise I'd be like, oh yeah, I know somebody. I've been doing this long enough over the last 30 plus years where I probably know somebody somewhere else that might be able to help them. But in that case, I couldn't. So rarely do somebody come to me and say, I can't. If I can't help them, I might know somebody that can. But most of the time, I can solve it with the products we have.
That's incredible. And bridge loans are for residential, right? Not investment or commercial or
Correct. Well, we could do investment case by case, but not commercial.
okay. So,
We can do
just ask,
investment
right?
residential. Pardon me?
We just have to ask. If you're not
Just
sure,
ask. Yeah,
call
absolutely.
Paul and ask.
And guess what? I know a commercial lender. So
Oh, there you go. Yeah. Any other terms or features of the bridge loan that you want to hit on today?
yeah, so it's important to talk about that. It's an interest only payment. It is
Okay.
a prime based payment, so it's based on the prime rate, and it is prime. Prime is generally a little bit higher than the current going rate, but because it's interest only, it is it's still a relatively affordable payment. And then there are no escrows, so the taxes and insurance you'll handle that during the time the bridge loan's out there.
Okay.
And then we do pay off, like I said before, we do pay off all of your existing loans. The other thing you could use this for, and we've used it on loans recently, is let's say somebody has some, they've run up some credit cards or they have an auto loan and that throws them off the qualification to purchase the next home, right? Well, if we're cashing out of
Yeah.
of your current house, we can, as long as there's room, we can use some of those proceeds for paying off debt
Hmm.
and allowing you to qualify for the next house. So, there's all sorts of, again, we think creatively with this. So
Yeah, I love this.
there's all
Yeah.
sorts of ways we can slice this. It's the bridge loan, and also stress. It's not like it's not a catch-all. It cures all ills. It's not like that. But there's a lot of different ways to apply these products to help people.
So it's kind of like selling your house before selling your house.
Yeah.
Right? It's kind of like, let's
Mhm.
just pretend I could snap my fingers and your house is sold and here's your money.
Right.
And now we can go out and buy your new house.
Right.
But really you're still in your old house. You're
Right.
still comfortable. You're still right? And you have the money. So yeah, this is pretty slick. I like it.
Yeah.
Yeah.
It is. And if we want to do what's best for the customer. So if we think, hey, there's a different way to do this, once we look at your whole application and financial profile, we'll suggest that. We're not gonna, it's not a one catch, we're not gonna say, well, a bridge loan for everybody. No, there might be a situation where we can say, hey, we're catching you early enough on, you can go ahead and get a home equity line of credit, just check the terms and make sure you'll be okay with it. We can do it that way. So it's not a situation where it's like, well, if you don't do a bridge loan, there's no way to do this. There might be a different way. And we definitely want to suggest that to the customers up front. So they know they need to know all their options.
Yeah, I love that too, because, coming to someone like you, Paul, you're going to have that as an option, whereas other lenders may just have option 1 or 2. You're going to have 1, 2, and 3, and maybe 4. So it is really important who you talk to, what products they have available. So buyers out there, definitely, give Paul a shout if you've been turned down or you don't think something's possible. With what his company does, in as much as they're doing their own lending, there is so much more flexibility and creativity that they can implement versus some other big banks or borrowers or credit unions or like Navy Fed. They're not going to be able to touch the creativity level and the options that someone like a local lender like Paul has available.
Right. And if you've got an option already and run it by us, I'll be happy to look at it. And if I think, hey, that's great, got it in writing, go with it, I'll let you know that too.
Yeah. And as you had mentioned earlier, the documentation needed is very similar to any loan, right? Pay stubs, credit report, bank statements, that type of thing.
Correct.
Anything additional needed for bridge loans that isn't necessarily
with your help, the rental comps,
Okay,
we
yeah.
can get them from an appraiser, but we save the customer a couple $100 by
Mhm.
getting them through a
Yeah.
great agent. So that's really the only other thing. Everything else we do maybe extra is just internal stuff. It's nothing the customer has to provide. Usually, it's very standard. And we also, when it comes to those documents, we sometimes provide a little bit of document relief on some things. It depends on the situation, but we'll make exceptions sometimes to documents if everything else makes sense.
It's funny. I had a scenario once where I had a buyer under contract and we were just 8 days to closing. I mean, we were almost there. And she decided that she didn't like the way something showed up on her credit report. So she called in to try to get it fixed. There was nothing wrong. There was no problem. She had excellent credit. But in doing that, she somehow raised like 9 red flags.
Oh,
And the lender had to make an exception and internally finance her, which they weren't going to do, just to make sure she got to closing because all of their investors shut down on them at that point. So again, knowing who your lender is, knowing they can do it in-house, it could be the difference between a successful transaction and a failed transaction. So Paul, I'm really truly thankful for your time today. Any last thoughts you want to share on bridge loans or on you and your company? How can people get a hold of you?
yeah. So the best way to get a hold of me is my cell phone, and text or call me, and evenings and weekends are fine too. And that's 703-926-5566. The one thing I'll tell you is my company, we lend not just bridge loans, but we do regular loans. We have 100% FHA loan. We have all sorts of products. It's amazing that we help people into homes and into their first homes or their second homes or their forever home. So give us a call, give me a call, and my team will be happy to help you.
And I don't know if everyone caught that, but he said weekends and evenings. And in this market where I work in Northern Virginia, if your lender is not available weekends and evenings, you are at a complete disadvantage right out of the gate. Forget it. If deals are going down on a Friday night, Saturday, a Sunday, Easter, whatever the case may be, your lender needs to be available. So that's the beauty of using someone like Paul. So Paul, thank you truly so much. I hope everyone learned something today and reaches out to Paul for their lending needs. And we're going to wrap up this show. Thank you everyone for tuning in yet again. Elizabeth Ann Klein in the Northern Virginia area. Please give me a call at 703-829-LIST if you have any questions on buying or selling a residential property. Otherwise, I can help you get connected to a professional in your area through our agent network. Please give me a call at 703-829-LIST, and we will talk to you all and see you all next time. And please subscribe.
When you're ready to sell your home, don't be silly and do it alone. You gotta get Elizabeth on the phone or go to List with Elizabeth.